Let's talk about another option to deferring or eliminating your capital gains from your sale. This strategy is called seller financing. Now, you're still going to be exiting out of the asset, but you're going to be holding back a loan to the new buyer. So you're essentially delaying the total sale. This is actually extremely rare. And most times you probably want to just get rid of the asset and have nothing attached to the new buyer so you can move on with your life. But that's just another example, and it's good if you just want a little bit of a cash flow stream from it. Now, I just bring that up because it opens up the door for kind of the strategy of installment sales here. If you think of a installment sale, as the name suggests, you're selling the asset in sections. Maybe sell it in three sections where you're doing one third now, one third in 5 years, the other third in 15 years. Now, you're probably wondering, like, why the heck am I doing this? It's so complicated. The idea here is if you don't take the capital gains on your side, then you don't have to pay the taxes on it. So the theory here is if we're able to structure the installment sale in such a way where you're throwing the sale proceeds plus the capital gain and depreciation capture out into the long future, then in a way you've taken the sting out of the taxes. And that's the whole idea behind why we invest in real estate with mortgages and loans, because we use the time value of money, just like how we do a 30-year mortgage and we're paying it with future dollars, which is worth way less. Same thing here. We're paying future tax gains with future dollars, and we're just kicking the can down the road, allowing us to shelter our taxes today so we can have more of it to grow it, make haste in the next 5, 10 years from now. So obviously you can create these installment sales in infinite amount of ways, but just know it's another option out there. But again, it's a little costly, it's a headache, but it's just another one out there. And I would probably say if your capital gain and depreciation recapture is under $1 million, even under $2 million, it's probably not worth the headache of this. Where this really makes a lot of sense is a dentist and you started a franchise from $50,000 and you grew it to $5 million. That's a huge capital gain. Then that probably makes a lot of sense to do one of these installment sales, DSTs, or more exotic strategies. And to get even more advanced with this, if you're trying to sharpshoot a certain amount of income stream to stay under a certain tax bracket, you can also get as technical as that. However, we don't know what's happening with the tax brackets in the future and how they interplay with each other. So it makes this very difficult. And again, this is just to have you start to think about these types of options. But again, this only works out in very rare situations. In most cases, seller financing really advantages the new buyer. So not you in this case, unless it helps you in your tax situation. Most cases, I advocate to just take the money, use some other method we talked about here, namely the lazy 1031 exchange, and just get out of the asset and move on to the next deal. The one thing I will mention, as we're getting a little bit advanced here, we don't know exactly how the depreciation recapture is impacted in one of these installment sales. So talk to a CPA specifically who's running your case on how that's done. If you need a referral, please reach out to the team at wealthelevator.com.